we'll move on. I'm conscious of time. Next guest is to welcome Joe Cunane from TRI Professional Service, who is a strategic expert in helping you save hundreds of thousands of euros, so it says, on tax, legally. That's a good sound. If anybody's interested in that, I certainly am. Joe's a former Aussie Rules player, I don't hold that against him, and also won the High Achiever of the Year award in 2013. Could you please give a big welcome to Joe Cunane? Joe, saving thousands, tax legally, I suppose that's what we're going to get to, but just explain a bit your business, or what you're involved in.
Yeah, well, I suppose from our business perspective, we're very much in the game of tax planning. And Eddie mentioned being passionate about what you do, and we're passionate
About tax?
Believe it or not. Not maybe the tax part of it itself. We're passionate about providing tax efficient solutions to our clients that will make a positive, lasting change to their business and lives. We can make a difference, and I think we can all make a difference in what we do, whether it's tax. I know it's the most exciting subject in the world, but if it's done well and done in the right way, we can make a positive difference.
It says here, one of the questions, you specialise in helping business owners save many thousands and achieve financial independence as a result. Mm-hmm. Can you give us an example?
Yeah.
What I have here.
Well,
I don't know whether it's a specific example, but possibly an example of you go into a business situation and what you deliver. I mean, what
Yeah. Well, first of all, I suppose I would see what we do as being part of a cog in the wheel of achieving financial independence. There's a number of parts of that wheel, but good tax planning would be one of them. So, for example, your headline tax rates are now over 55%, or they're over 50%, sorry, they're between 50 and 55%. Your capital gains tax and your gift and inheritance tax is up to 33%. So technically, and this is looking at it from a very, very simple perspective, if you have good, efficient tax planning, you could become financially independent between 1.5 to 2 times quicker.
But this is being ignorant. Don't most businesses have efficient tax planning, or do they not?
Perhaps they do, perhaps they don't. I mean, I can't comment for every business. I've come across some businesses who have.
No, but obviously the people that come to you don't have, in a sense, or you feel that you can improve their tax situation.
Yeah, what I tend to see out there, and again, this is only from my perception, what I see out there is that, especially in the small to medium-sized business sector, they don't have, let's say, an advisor who provides specialist tax advice. Now, that's not just
doing it on their own.
Well, no, they may have an advisor who's looking after their accounts, right? And some of those advisors, don't get me wrong, do a very, very good job and provide a very good service, but they may not specialise in being able to spot tax planning opportunities. I mean, I can give a very simple example maybe of...
Yeah, please do.
Yeah, but for example, first of all, these things are very specific to different people's business, but let's say somebody has 2 properties, and one thankfully has gone up in value. They bought it for 500,000, it's gone up to, say, 800,000. The other's gone down.
Probably more the case.
More the case, yeah. But it might have gone down, let's say, from 500,000 to 200,000. So they bought the 2 of them for $1 million, and they're both worth $1 million now, right? They don't particularly want to sell them, but the bank is putting them under pressure to maybe start making capital repayments on top of the interest. And they may have a very successful business. They may have a lot of money tied up in their business, but all that money is tied up in or protected nearly in whatever corporate structures they have. So something really, really simple. If they were to take that $1 million out of their company, it could cost them an additional $1 million plus in tax. If they were just to sell those 2 buildings to the company, there would be no capital gains tax, there would be 2% stamp duty. You get to keep the buildings, you take the $1 million out of the company, pay off the bank, you retain ownership of the buildings, and save €1 million. You
can take the $1 million straight away.
Yeah, I don't take half.
Is that kind of the example of, you find, I suppose, one of the things down here is that you see, obviously you see people losing a lot of money, from, I suppose, inefficient tax planning.
Yeah, potentially.
Potentially.
Now, that to me would be a very simple example.
Potentially.
But sometimes maybe, sometimes the
simple as that, I presume you can lose potential earnings on tax in a lot of ways.
Yes, yeah. Well, listen, first of all, I mean, I'm speaking the obvious here. First of all, you need to be making profits in order to save money on tax. Because obviously, if you're not making profits, you're not going to pay tax in the first instance. Right? The more profits you make, the more opportunities for tax planning you'll get. To keep it at a really simple level, if you'd be surprised at the amount of people who, for example, when they're submitting their annual tax return, they don't claim health expenses. It's really simple. But revenue refund about €3 million a year to about 30,000 about 30,000 people in unreimbursed health expenses. Something that's
makes sense to be said. Makes sense to be said.